Have you ever wondered if the money sitting in your bank account is really yours? Or why it takes 3 business days for a transfer to go through in an age of instant everything? Well, get ready, because a seismic shift is happening right under our noses, and it's all thanks to something called stablecoins. This isn't just another crypto buzzword, it's the blueprint for Banking 2.0, and it's about to change our relationship with money forever. So, what exactly are stablecoins? Let's break it down simply. Imagine you have a digital dollar. Not a number on your banking app, but an actual digital token that lives on the internet. For every one of these digital tokens, there's a real dollar, or a highly stable asset like a government bond, held in a reserve. This peg keeps its value stable, 1-to-1. So one stablecoin equals $1. Simple, right? Unlike other cryptocurrencies that can swing wildly in value, stablecoins are designed for stability. They combine the best of both worlds, the security and trust of traditional currency with the speed and global reach of digital technology. Now you might be thinking, okay, cool, a digital dollar. But what's the big deal? I already use digital payments. That's where things get really interesting. Let's look at our current banking system. When you send money to a friend, it doesn't just zap from your account to theirs. It goes through a complex, slow, and often expensive web of intermediaries, banks, clearinghouses, and payment networks. It's a system built on technology from the 1970s. It's like sending a letter by horse-drawn carriage in the age of email. This old system is slow, especially for international transfers, which can take days and rack up hefty fees. It's also not inclusive. Billions of people around the world don't have access to traditional banking services. For them, participating in the global economy is incredibly difficult. And even for those of us with bank accounts, our money is subject to the bank's hours, their rules, and their fees. Enter stablecoins running on blockchain technology. Think of the blockchain as a global, public ledger that's open 24/7, 365 days a year. When you send a stablecoin, you're not asking a bank for permission. You're sending value directly from your digital wallet to someone else's, anywhere in the world, in a matter of seconds, not days. The transaction is recorded on the blockchain, making it secure, transparent, and almost instantaneous. The cost? Often just a few cents, no matter the amount or the distance. This is a game changer for so many people. Imagine a freelance designer in Southeast Asia getting paid by a client in New York. Instead of waiting a week and losing 5 to 10% in fees, they can receive their full payment in stablecoins in minutes. They can then instantly convert it to their local currency or use it to pay for goods and services online. This opens up a world of economic opportunity that was previously out of reach. It's true financial empowerment, but the revolution doesn't stop at payments. Stablecoins are the foundation for a whole new ecosystem of financial services known as DeFi, or Decentralized Finance. DeFi aims to rebuild the entire financial system, lending, borrowing, earning interest, insurance, but without the traditional gatekeepers like banks. With stablecoins, you can lend your digital dollars directly to others and earn interest rates that are often significantly higher than what a traditional savings account offers. You're essentially becoming your own bank. Think about it. In the traditional system, your savings in a bank are lent out to others, and the bank pockets most of the profit. In DeFi, you lend your stablecoins through a smart contract, a piece of code that automatically executes the terms of the loan, and you receive the majority of the interest. The risk is managed through over-collateralization, where borrowers have to lock up assets of greater value than their loan. It's a more transparent and efficient system where you are in control of your capital. This is what we mean by Banking 2.0. It's a system that is user-centric, not bank-centric. It's open, permissionless, and global from day one. It's not about replacing banks overnight, but about creating a parallel system that offers a real, competitive alternative. And competition is always good for the consumer, right? It forces the old guard to adapt, innovate, and offer better services. We're already seeing major financial institutions exploring their own stablecoins or integrating existing ones into their services. They know they can't afford to be left behind. Of course, this new world isn't without its challenges. Regulation is a huge topic. Governments and central banks around the world are trying to figure out how to manage the risks while fostering the innovation. How do you ensure the reserves backing a stablecoin are truly there and properly managed? How do you prevent illicit activities while preserving privacy? These are complex questions, and the answers are still being worked out. It is crucial that we get the regulations right to protect consumers without stifling the incredible potential of this technology. Another key aspect is user experience. Let's be honest, using crypto wallets and interacting with DeFi can still be a bit clunky for the average person. But just like the early internet, the user experience is getting better every single day. Companies are building intuitive apps and platforms that make using stablecoins as easy as using Venmo or PayPal. The goal is to make the underlying technology invisible, so you're just enjoying the benefits: faster, cheaper, and more accessible financial services. So, where is this all heading? Imagine a future where your salary is paid in stablecoins. A portion is automatically sent to a DeFi protocol to earn high-yield interest. Another portion is used to pay your bills instantly, and you can send money to your cousin overseas for a tiny fraction of a cent, all from a single app on your phone. This isn't science fiction. The building blocks are already in place. We are witnessing the birth of a new financial infrastructure, a global, programmable, and truly digital monetary system. The shift from traditional banking to this new paradigm will be gradual, but it is inevitable. Just as the internet decentralized information and gave us all a voice, stablecoins and blockchain technology are decentralizing finance and giving us all economic control. It's about taking back ownership of our money and having the freedom to use it how we see fit, without unnecessary delays, exorbitant fees, or restrictive gatekeepers. This is more than just a technological upgrade. It's a fundamental reimagining of what money is and what it can do for us. It's about building a more inclusive, efficient, and equitable financial system for everyone, everywhere. The journey to Banking 2.0 has begun, and stablecoins are paving the way. The next decade will be absolutely transformative, and you are here to witness it firsthand. Thank you so much for joining me on this deep dive into the future of money. If you found this fascinating and want to learn more about how technology is shaping our world, make sure to hit that like button and subscribe to the channel. Don't forget to ring the notification bell so you won't miss our next video. What are your thoughts on stablecoins and the future of banking? Let me know in the comments below. I read every single one. Until next time, stay curious.